Singisho, County, Kapseret specifically. Nancy is logging in from Nairobi. CPN from Nanyuki. Thank you. So an update for this webinar. We will be recording this webinar. We will also be streaming live on YouTube. And this is for the members who can wish to refer back. Without taking much time, members, allow me to welcome our managing partner for the opening remark and the welcome note. CPA Dot. Yes, welcome CPA Dot. Yeah.
Thank you, CPA Elias. Sir, you can hear me? You can see me?
Yes, I can hear you loud and clear. I can see you. Thank you.
Okay. Good evening, everyone. Thank you again for joining us for this session, where today we are discussing combined assurance. So as Elias has said, we postponed this meeting from last week to this week because of many issues, but now that we are doing it this week, our presenter just got a bigger title, so it's good news for everyone. This is our 11th episode, which should have happened in November, but because of the reasons you've explained, this is why we're doing it in December. So, and this will be our last session. So we have run a very good run with these free webinars, where we've shared knowledge all the way from January, where we started about demystifying GRC, then we went to ESG, then we had a whole run about value of internal auditing. And in the month of May, we deliberated a lot about the value of internal auditing and what we do. And then we went on to talk about mental health, and we've gone on, and now we are at combined assurance. And at this point in the year, we are winding up our projects as internal auditors. We are winding up and closing down for Christmas. And it's a good season to just sit and enjoy and give thanks. So thank you for joining us throughout the year, for joining us through our webinars, through our activities, through the X-Space conversations and discussions that we've been having. And through them, we have learned a lot together. And this is my way of saying thank you for making our sessions engaging and full, because you're always signing in and always learning with us. And for our facilitators, I also want to extend my gratitude from us at Dorte&Associates for volunteering your time to share with us very valuable knowledge that we would otherwise get it very expensively out there. So at Dorte&Associates, as we always say, we are a business consultancy, and we focus in governance, risk management, and compliance. We offer solutions all the way from setting them up for you, governance structures. We review them for you if they're inexistent, and we tell you whether they need to add, to be changed, or to be improved. In addition to that, we offer capacity building in the same areas: governance, risk management, controls, compliance, and we offer outsourced internal audit services as well. But during our free sessions on a monthly basis, we come together every last Thursday of the month to just discuss a deep dive on the subjects that relate to that topical area. So today we have a speaker with us, and I'll give the opportunity for Eliasa to introduce him. But I just want to say we've also had a good run with the coffee dates, as you've seen from our various plans and discussions. And in the coffee dates, we've been able to meet to discuss. We've been able to discuss about unfolding the young professionals, networking, and learning from each other. Thank you very much again for joining those. And this Friday, we are having the last one in Kericho. So for those of us who are near there, you're welcome to join us. So without taking much more of your time, I just want to hand this over back to Elias so he can introduce our very honorable speaker for the day. Back to you, Elias.
Thank you. Thank you, CPA Dot. Yes, so just to introduce the speaker for the day, F. Yes, I like mentioning the F. FCPA Edwin Kamar is an experienced accountant focusing in public sector internal audit and financial management. Is the Deputy Auditor General working in the Office of the Auditor General. It's a big office. It's one of the big offices in Kenya. And at Dorte&Associates, we are privileged to have FCPA Kamar. Talking of the qualifications, is a certified public accountant of Kenya, a certified internal auditor, certified fraud examiner, without mentioning many other qualifications. So is bringing a lot of experience in the sector, and we are privileged as Dorte&Associates to host FCPA Edwin Kamar. So it's without much ado, it's my singular honor and a singular duty to introduce FCPA Kamar. FCPA, welcome. The floor is yours.
Yeah, thank you very much for this opportunity to share the knowledge. I believe all of us have a space to contribute here. That's how I look like. That's
Yes.
my name is FCPA Edwin Kamar. I think this title of FCPA, this is the only one where F is good. Otherwise, when we are in school, if you got an F, you'd really not feel good. So today we are looking at something which most of us are well versed. I'm just trying to get it looks like I'm using a gadget which I'm not well versed, but I'll get there in a few. I suggest that maybe one of you could project so that it becomes easy.
Yeah, so that's fine. We will do that right away, FCPA.
Yeah, so as Elias is connecting, I think it's also good to speak of a bit of my background. I think when the managing partner was doing the introduction, I had some issue with connection, so I dropped off. I'm not sure whether she had given my bio, but just for those who are meeting with me for the first time, I serve in the Office of the Auditor General as one of the deputies to the Auditor General. We are 7 in number. So currently I'm in charge of 2 sectors at the national government, and that's the education sector, comprising of all the ministries, MDAs, ministries, departments, and agencies, and the Ministry of Education, including commissions and independent offices, sagas, donor-funded projects, all across, and universities. And then the other sector which I'm in charge of is Ministry of Health, Social Protection, Labor. So I'm also in charge of the clients, including NSSF and so on, as well as the NHIF, which has come to an end, and the SHA, which is taking over. We also audit in the regions. I'm in charge of 3 regions, which covers 9 counties, and the regions are Kisumu, regional office. Kisumu has Siaya, Kisumu itself, and Vihiga. Then Homa Bay regional office, which has Homa Bay County, Migori, and Kisii. Then I'm also in charge of the North Garissa regional office, which covers the Northern Frontier District. That's Garissa, Wajir, and Mandera. We Are you able to project?
Yes, we're working on it. Just continue.
Okay. So it's interesting how time flies. I was counting my experience the other day when we were putting together the nomination for FCP, and I realized that I'm not getting younger. I've worked for 25 years now, so quite an experience. They say no one has monopoly of knowledge, and in the Bible they say iron sharpens iron, so as to human. So I'm also here to learn from you today. So I was requested to present on this interesting topic on understanding the combined assurance framework, and I'm speaking from an external audit perspective. Of course, for better part of my life, more than 12 years, I was in internal audit. So if we go to the content. So in terms of content, we have quite a lot there. Of course, the Auditor General being my employer, I have to pledge loyalty and take a few of the minutes of the time given here to just share with participants what's the mandate of the Auditor General. And more importantly, because we are citizens of this country, so it's in our interest that we know how the public resources are used. And then we'll take a deep dive into what combined assurance is, look at the assurance providers, the 3 lines model, coordination efforts. We look at the assurance map, benefits, and then the ingredients, approach to combined assurance model, challenges, and including tips on how to begin if we have not started, and then from OAG perspective. We can move to the next slide. So in terms of mandate of the office is an independent office created under Article 248, subsection 3. And it's one of the 17 commissions and independent offices created under the Constitution. You can move to the next slide. And it's operationalized by the Public Audit Act 2015. Of course, there's amendments which are underway. There's a bill in Parliament to remedy some areas of the Public Audit Act where it was declared unconstitutional by the court in 2016. So we have Article 229, subsection 4, which talks of audit of accounts of all public entities. And currently we have about over 12,000 entities that we audit. Recently, schools became self-accounting entities, and they are required to prepare separate financial statements. So they came in about 9,390 something, 98. Then if you look at Article 229, subsection 6, the Auditor General is also required to confirm whether public funds have been used in a lawful and effective manner. And I normally say that it's not only enough that it's done in a lawful way, but also the resources being used in an effective manner. Of course, Article 252 gives commissions and independent officers general powers of conducting investigations on own initiative or complaint by a member of the public. So as a participant here and being a citizen of this country, if you have an issue, you can always put in a complaint to the Auditor General, and we'll be able to evaluate. We also do conciliation, mediation. So overall, our mandate is to influence the development of our nation and just improve the quality and ensure that the services we provide is quality and sustainable to the people of the Republic of Kenya. Next. So quickly in terms of the audit types, and I'll not spend a lot of time here. So we have, they're actually articulated in the Public Audit Act. So if you look at section 34, it talks of periodic audits. And this speaks to either on request or on initiative, we can conduct periodic audits, which the objective is to being proactive, preventive, and deterrent to fraud and corrupt practices. So the objective is evaluating the effectiveness of risk management, control, and governance processes in state organs and public entities. Then we have the ones which we are well versed, the financial audits, which has a constitutional deadline of 31st December. It's normally within 6 months of end of the fiscal year. So for every public entity, the Auditor General has to issue an opinion whether the books is a reflection in terms of true record. So, and that's where you get these opinions, unmodified, qualified, others are adverse and disclaimer. And it covers the 12,000 plus entities. The next type of audit, if we can move, is performance audit. And performance audit looks to the value for money in terms of the economy, efficiency, and effectiveness. And if you look at that section 36, subsection 2, actually on completion of any significant project, the Auditor General is supposed to undertake a performance audit, just to give assurance to the citizens that they have gotten value from investment in the project. And all these reports we submit to Parliament. We also have another type of audit, which is forensic audit. And this is normally comes mainly from Parliament. And I'm sure you have heard our MPs, senators, and even county assemblies asking for forensic audits. So this one is done in a manner that you're sort of preparing to go through a court process. So the threshold in terms of evidence being collected is quite high, so that in the event there's it goes for prosecution, then it can stand the test of the court. So we also have other types of audits, procurement audits. Now this looks through the procurement process and speaks mainly to the Public Procurement and Disposals Act 2015. Then Section 39 speaks to that all the reports shall be submitted to Parliament or the relevant county assembly. I know a number of us normally ask why we stop once we submit the report to Parliament or the relevant county assembly. It's because of mandate. There are people who are supposed to pick it from there. We have ESCC, we have DCI, and so on. So in terms of structure of the audit report, and this is the financial report, it has 3 sections. There's the financial statements where an audit opinion is issued, and I've already spoken to that. Then there's the section which speaks to lawfulness and effectiveness in use of public resources. So we consider compliance with applicable laws, the Public Procurement and Assets Disposals Act. You have regulations, you have policies, you have gazette notices, circulars, guidelines, and manuals. So for example, if you are in a public entity and you don't submit your statutory deductions in a timely manner, or the issue of the gender, the 1/3 gender rule in terms of employment, or the 5% for persons living with disability, and so on, they fall into this category. Of course, the other aspect is in terms of whether public resources are being applied in a prudent, efficient, economic, and transparent manner. So as to ensure that there is value out of all of that process. The next section ties closely to what internal auditors do, and this is the report on effectiveness of internal controls, risk management, and governance. And this actually is I can say is the bedrock in terms of an organization. And this is where we speak to issues of like establishment of a board audit committees, for example. How functional, how effective is the internal audit function? We evaluate that. And this is where we come in a very strong way. Also, issues of risk assessment and any other controls which are put in place. For those people who are from counties, for example, we speak to the systems for collecting revenue, on-source revenue, amongst others. So now going to the subject of today, it's about combined assurance. And just in simple terms, combined assurance speaks to the role of management, the internal assurance and external assurance providers working together for a common purpose. If we can move to the next. So combined assurance is the concept that various assurance providers within an organization coordinate and find alignment in their work. From there, we have combined assurance allows these providers to then present a streamlined, cross-checked view of organization controls, risk and governance to senior management, the audit community, and other stakeholders. So what we leverage on is you avoid duplication in terms of if you are an external auditor, for example, you leverage on the work which has been done by other assurance providers. So, for example, the work of internal audit. So, looking at the standards in terms of the ones which are issued by the Institute of Internal Auditors, the current standards which are being phased out, Standard 2050, focuses on importance of coordination. And it, if I may quote, the chief audit executive should share information, coordinate activities, and consider relying upon the work of other internal and external assurance and consulting services providers to ensure proper coverage and minimize duplication of effort. So if you are in internal audit, for example, you have the risk management function or other functions like legal and so on, who have, or IT auditors who have done, if they don't fall within internal audit, then we can be able to rely in terms of what they have done. Of course, the standards which are coming in 2024, the Global Internal Audit Standards number 9.5 on coordination and reliance is that the CAE must coordinate with internal and external providers of assurance services and consider relying upon their work. And this minimizes the issues of duplication of efforts, highlights gaps in the process, key risks, and enhances overall value added by providers. Remember, internal audit, the purpose is value addition. So if we are not adding value, then our relevance in terms of effectiveness is minimized. So it's about internal and external working more closely together to ensure the following. So one is there must be key outcomes of combined assurance. And then we are doing assurance in the right areas is obtained. So the focus is on high risk areas. You don't want to use your resources on mundane things, which there's very little impact. And then you obtain, the assurance is obtained from the right resources. And again, you must work with people who are experts. And at the most cost-effective way possible. So giving an example, our office, when we are evaluating public entities, we actually look at the maturity level in terms of the audit function. So one of the requirements is, where does the internal audit function, does it report to the CFO, or does it report to the committee of the board and with administratively to the CEO? So that forms the basis. If we may continue, next slide. So what's the role of internal audit in all this? So internal audit plays a key role in terms of developing the framework for combined assurance. They are the ones who steer the execution of a combined assurance audit strategy. And remember, internal auditors normally is the link between management of the organization and other external assurance providers, including external auditors. So you'll find that internal auditors work in areas like risk control and controls, and there can be a lot of overlaps with other departments. I know in public sector there's a shift to actually separate internal audit from risk management, because risk management is more operational. So we would say that in layman terms that the internal audit is best placed to take the driver's seat to be able to coordinate all this function of combined assurance. So who are the assurance providers? So I've already alluded to this fact that we have, within an organization, we have management, and we also have internal and external stakeholders. So within internal, we have enterprise risk management, health safety, legal and compliance, and company secretary. On external front, you have the external auditors, you have the quality assurance providers. On management side, you have the EXCO. You also have management functions that oversight committee, and mainly the objectives to be preventive, detective, and control self-assessment. Let's go to the next slide. So looking at now drilling deeper in terms of the assurance providers, we begin with internal, and their main objective is support management in management of risks and coordinate risk management activities. And they comprise of line management and employees who are first line over the risks and controls, which they are responsible. We also have senior management, enterprise risk management, compliance, security, information security, budget planning. I've spoken already to environmental, health, and safety auditors. And then those teams which do reporting. Also, we speak of internal auditors, forensic auditors, the ISO certification, and I don't want to go to a lot in terms of these details because we'll be able to share these slides for you to go through at opportune time. We also have the committees of the board, such as the audit, finance, and governance. Then we have the external assurance providers, and I think top on the list is external auditors. And for those who are coming from private sector, actually the external auditor for all the public funded entities is the Office of the Auditor General. Of course, we have arrangements, instances where we delegate the function to private firms, but we supervise. So we have other regulatory inspectors as required by legislation. I'm wondering whether those guys who do like the OSHA, the ones who do inspections, whether they fall into this category. And we have a whole range of those people there, other external performance improvement consultants as needed. Next. So we want to look at the 3 lines model and combined assurance. So we have the governing body, which takes the form of either board of directors if it's a company, takes the form of the council if it's a university, or trustees if it's a pension scheme. Then you have the management. The management now comprise of the leadership of the organization, and then we have the internal audit. So if you look at the arrows which face up, it speaks to the issue of accountability and reporting. Then the ones facing down is on delegation, resources and oversight. And then the ones going across speak to alignment, communication, coordination, and collaboration. And then on the side, on the extreme right, we have the external assurance providers. We can move to the next. So now going into detail in terms of the 3 lines model. The first line, it lies with the business and process owners. So for example, if you are head of finance, for instance, then you're the first line, or HR, or whatever. So operational management is responsible for maintaining effective internal controls, for executing risk control procedures on a day-to-day basis. And remember those days, remember that there used to be at some time that before finance, we used to do expenditure audit. We used to sign vouchers to give assurance. But things have shifted now that the owner of the process must take charge. And by the time the finance people are approving payments, they have satisfied themselves that it's in order, all the requirements have been met, so that they take responsibility. So mid-level managers may design and implement detailed procedures that serve as controls and supervise execution of those procedures by the employees. And this is where the issues of SOPs, standard operating procedures, manuals come in. Then we come to the second line, which speaks to risk management and compliance. And this helps ensure that risk control and controls are effectively managed. So there are various approaches or strategies which are employed to be able to achieve this. So organizations, some set up risk management functions, and they go all the way to a committee. In fact, the other day we were having conversation in another WhatsApp group, one of those for internal audit, and the members were asking, where does risk management function report to? And we had diverse feedback. Then there are also those compliance functions, like legal. If you have a legal function which does legal audit, just to make sure that you are compliant with the applicable laws and regulations, which is strictly separate to senior management. So this also fits in as the second line of defense. Next one. So the third one, speak to internal audit, and why we put internal audit here is because it's independent of the processes, and they come in to give assurance. So I normally say that an internal auditor is like not a fund person, but somebody who tells you your roof is leaking and you need to fix. And if you don't fix, then over time the roof may fall. They may fall on your head. So I would say that in other organizations, internal audit may support enterprise risk management, but may not implement or perform risk management other than inside of its own function. That's when you are doing risk assessment to come up with your audit plan for the year. So I know one of the reasons, one of the questions which come a lot when we make this presentation is, so should the internal auditor be away when significant management decisions are being made so that you seem to be independent? No, the reason, the answer is no. You have to be there so that you guide, but you don't take part in terms of the making the decisions. We may progress to the next slide. Looking at the external audit, I think I've alluded to this from a public sector perspective when speaking to in terms of accuracy, and we look a lot in terms of financial statements materiality and conformity with the applicable accounting reporting framework. So, you know, in public sector, for example, we have IPSAS, International Public Sector Accounting Standards. So I think if you're in public sector now, the talk in town is transition from cash basis to accrual. So there's need for collaboration and communications across both first and second line roles of management and internal audit to ensure that there's no unnecessary duplication, overlaps, or gaps. I think for successful combined assurance, there must be coherence, there must be regular meetings and effective coordination and communication. And I normally say that communication is only effective if you're able to relay the message. If the sender of the message is able to pass if the receiver is able to get and decode what has been sent across. So sometimes we may think we are communicating, but we are not effective. So looking at the coordination efforts, so we have the board and EXCO, whatever reporting. Then we have communications in all the directions. We have bottom-up approach, and then there's the top-down. Then you also have across, and then we have various lines of management. You have the first line, line 2, line 3, and then line 4, the independent. And then bottom line is we are looking at integrated assurance through reporting on results of assurance, and then combined assurance using teams. So the objective is so that the work which is done by the first line, if the processes and the controls are working, then even as we do internal audit, we don't need to do substantive tests. You can actually do, you do test of controls. We are doing payroll audit, for example, which people have the rights to be able to introduce changes to the payroll and so on. So what is the coordinating role of Chief Audit Executive in accordance with the global internal audit standards? It says, and mark the highlighted areas, the Chief Audit Executive must coordinate with internal and external providers of assurance services and consider relying upon their work. Coordination of services, what are the objectives? It minimizes, or the benefits, minimizes duplication of efforts, highlights gaps in coverage of key risks, enhances overall value added providers. So if you're in internal audit, for example, when the new standards come up in January, it's a must. And if you are going to be subjected to quality assurance review, which is done every 5 years, if you are not in line with this, then you may not pass the review process. And I like down there, they say, if unable to achieve an appropriate level of coordination, the chief audit executive must raise with senior management and, if necessary, the board. We move to the next. Yes. So it still speaks in terms of reliance of the other assurance providers by the chief of audit executive. And maybe in our context, in terms of public sector, we talk of head of internal audit or director of internal audit. So the words are used interchangeably. So where are we moving? We are moving to relying on the work of other assurance providers on an ongoing basis and even long-term. So when we come to the table, we need to document the agreed upon relationship and the specifications in terms of the assurance that you're going to provide, so that it's clear that for internal audit, maybe because we might not have capacity in terms of IT audit, we could use one of the IT functions, like information security, to assist us in terms of doing an audit of on cyber security. Next. So how do we implement coordination and reliance? We have to develop a methodology for evaluating other providers of assurance and advisory services, and that should include, that will form a basis for relying upon their work. So amongst others, the evaluation should consider the roles and responsibilities of the providers, the organizational independence, and this speaks to the issue of impairment. So if the assurance provider that you intend to rely on is not independent, then there's likely to be impairment. Then we also look at the issue of competency, objectivity, and then the issue of professional care applied to their working. So, and this brings to the fore in terms of, if you look at most professionals, they have a code of conduct which guides the way they do their things. So, so examples that are noted by the Institute of Internal Auditors around coordination. So there's the issue of synchronization, and gives the description what it is, techniques and methods, ensuring a common understanding of assurance, techniques, methods, and terminologies. We have sharing of information. So like, for example, external audit would like to rely more on the work of internal auditors. So for example, like fixed asset verification, confirmation, the issues of stocks and so on, the external assurance providers can rely on the work of internal assurance. Then periodic meetings, this requires meeting intermittently to determine whether it's necessary to adjust timing of planned work based on results of work that has been completed. And then we have the issue of risk maps, which assist in enabling better understanding which risks are covered by other assurance providers within the organization. And those organizations, those of us from organizations which have well-established legal unit or compliance units, I see organizations like telcos, for instance, they have well-established revenue assurance functions. So if you're in internal audit, you may not need to undertake audits around revenue. So just continuing in terms of coordinating role of the chief audit executive. So we say that coordination between assurance providers includes regular sharing of reports and outcomes of assurance activities. And sometimes one-on-one or online meeting
is key to be able to share information so that you're on the same page. I know sometimes we share reports, but it also makes a big difference when you have conversation with the other assurance providers. Of course, this coordination should be on a regular basis, include time for discussion and review of techniques. Lastly, there is the CAE may develop an annual report to be shared with the organization's board and executive management. We should outline organizations' assurance provider framework, the coverage of the assurance being provided areas of high risk, and residual and mitigated risk areas within the organization. And this is of interest to management because when you're at the top there, you want to be told what could go wrong before it goes, as opposed to waiting until things go wrong, then we jump in. So there's also an alternative in terms of for the CAE to coordinate the development and distribution of these reports through organizations governance or risk management function. And it says, regardless of the origin of the report, it's important that the CAE can rely on techniques and methods of performed by the assurance. I remember in audit, while I was still in internal audit, they say audit the data or else, because sometimes the systems and the processes are good, but it's also good to test in terms of the throughput through the system. So a thorough, documented, and continuous risk management process is part of good governance and an important management tool to provide assurance that appropriate controls are in place to achieve the objectives of the organization. So what are the areas of collaboration between internal audit and external audit? Planning. That's one area in terms of agreeing on the scope of both internal and external audit to save on resources. And we do this big time. Imagine that audit universe of 12,000 plus clients, and you have 3 months, because the Constitution gives us 6 months to audit. But there's something called the Public Financial Management Act 2012. We took away our 3 months in terms of giving the public entities 3 months to prepare and submit financial statements to the Auditor General. So it leaves us with 3 months to audit those 12,000. So you have to be a bit strategic. And one area which we are going to see greater collaboration is working very closely with internal audit, and maybe even ahead of the commencement of the audit, as you develop your audit plans. This is an area where we'll identify maybe areas of mutual interest which you can be able to cover. During execution, using the same numbering of financial processes to ease communication during internal audit of key controls. So if you have similar methodologies in terms of audit, then it becomes easy to interpret. Then on reporting, agreeing on deadlines for both for external audit to be able to use information from internal audit. It's sort of an issue of synchronization of the calendar, so that by the time you are coming as an external auditor, the internal auditor has completed their audit plan, and the reports have been adopted by the audit committee, so that you can be able to rely on them. Next. So there's also the aspect in terms of developing assurance mapping, risk management, and compliance, using similar ratings. Of course, internal audit will make its own ratings because we are using the global international audit standards, while the external auditor uses international audit standards. If you are a public sector audit, you use ESIS,
which is international standards for supreme audit institutions. And then, of course, the area of recommendation, implementation, follow-up activities. And this is quite key in terms of getting things done, that follow-up by internal audit. Because as soon as the external auditor completes, and I'm speaking from both perspective, private and public sector, as soon as the external auditor exits, if there's nobody to remind management on the things that they need to do, then it will go to the back burner. They'll only be realized that they were supposed to be done when the next audit cycle commences. Move to the next slide. So I'll do a bit of high-level assurance maps. It's quite detailed, and because of interest of time, I will allow people to interact. We'll share these slides, and we'll get feedback. So on the assurance map, one way is to coordinate assurance coverage, is to create a map which gives a matrix of the organization's risks and the internal and external providers of assurance services that cover those risks. So it's about identifying the areas where there's high risk and then assigning responsibility. So in this map, you identify significant risk categories, with, of course, identifying the relevant source of assurance. Is it going to be internal and external? And provide us an evaluation of the level of assurance for each risk category. And this reminds me of a conversation we had with an internal auditor. Our team is in the organization. And what that organization has done, because they don't have capacity in doing IT audit, they have actually gotten a sort of consultant to assist in terms of reviewing the IT processes. And the external auditor was raising an issue that there was no consultation with the supreme auditor before the appointment. And it's a conversation which we have picked. So the map exposes gaps and duplication in assurance coverage. So enabling the CAE to identify the sufficiency of assurance services in each risk area. So the map should be formulated during the annual planning and should be regularly updated to determine levels of assurance of key risks. So for example, before June 25th, when Gen Zs came to town, I think from I'm trying to get the right word to use this. I think there was very little attention being paid to what goes on in social media. If you go to X and so on, but now there's a lot of interest in terms of even security agencies following, because that's where there's a lot of information. So there should be a regular discussion with other assurance providers. And this is just a typical, that's fine. Go to the next one. This is how it looks like in terms of, so you plot on one side, you have the functions. So you have financial reporting, financial controls, legal, IT, all the business processes. And then on the other side, you have the lines, the first line, second, third, and fourth. So this is who is assigned that responsibility. So you have the control framework, management review. And when you speak of control framework, is what make sure that we do the right thing in the organization the right way. Then you have management review, we have control self-assessment, risk and compliance review, group legal, and so on, going all the way to external auditors and other third party. Then now it's assigning responsibility. Down there you see the color scheme. So Green is where you need the highest level of assurance. Yellow is where you need medium. And amber or orange is low risk. And red, no assurance, should be in this area. And then based on this now, once you have identified, now you assign the individual assurance provider. This is an example of an assurance map showing the 3 lines model based on process. And again, because of time, I'll not go into it in detail, but you can be able to go through it. This is another one, more complex. I hope we'll get time another day to go through this. It's quite detailed. Next. So all this speak to the issue of the assurance maps, and you can use various models. You can use the COSO, Committee of the Sponsoring Organization of Tradeway Commission, or the Sarbanes-Oxley compliance model. So what are the benefits of combined assurance? We look at from 2 perspectives, is it from internal and external. Let's go to the next slide. So the first one is we do the work in a coordinated and relevant assurance efforts are directed to the most significant areas. So you want to put your resources where it's mostly needed. And remember, the resources are finite. So you cannot say that you want to cover every aspect in terms of your organization. Then there's reduction of costs. Of course, time is money. So when you deploy resources, the more the resources you deploy and the more the duration, the more it will cost. Of course, the issue of repetition in terms of reduction. And then we have comprehensive and prioritized approach in tracking of remedial actions and opportunities, business opportunities or areas of weakness. So these assurance activities, they actually produce valuable integrated data based on collaboration and not in silos. I was looking at using one of the telcos, for example, Safaricom. If you look at the data the data that they're able to collect, it's quite enormous. And Safaricom have found a way in terms of monetizing that data so that they can be able to come up with products which suit different types of customers. So it helps in terms of driving the innovation strategy. But imagine if revenue assurance, which is quite big for Safaricom, because they have to get assurance that the billing is being done right, nobody is being overbilled, or you don't have some people are enjoying free calls and so on. Imagine if that was not being done in a coordinated way, and you have internal audit going to that space again to provide assurance, then there would be a lot of, it will be very costly. Of course, the other benefit is enhancement of controls, and ultimately organizations achieve their objectives. So I'll touch on the ingredients. I see my time is well spent of effective collaboration. Let's go to the next slide. So there are 5 essential ingredients for establishing effective collaboration between independent and internal auditors. So there must be a common purpose. We must understand the goals, motivations. They must be well defined and clear. And now they align with the responsibilities and authorities within the organization. If you look at in an organization, when you're implementing a strategic plan, for instance, you actually want to derive the objectives of the leadership, each department, from the strategic plan, so that down there, so you cascade them even to the lowest level. Then even the office assistant, as they do their day-to-day activities, they're contributing to the overall strategy. So that speaks to the purpose. So the second aspect is there must be independence and objectivity. So we must identify the compensation and the reporting structure. Of course, you need to look at the level of freedom. To what extent are these people have that flexibility in terms of making certain decisions, and also to what extent do they align with the ethical standards. There's also the issue of competence. You want to determine the qualification and the requirements needed for each role, such as education, technical training, certification, professional experience, etc. So we need to do an assessment of how the resources are well aligned. And then elements of practice. So this speaks to the issues of policies, programs, and procedures, and they should be in place and understood in order to be followed. So what I've seen sometimes when we are doing audit, there's something called process interviews. So there's the documented procedures in terms of like procurement, but when you go and sit with the process owner and ask them, walk me through the procurement process. How do you procure a motor vehicle, for example, an asset? They'll tell you and you document. And then when you compare the practice against the documented, there's always a gap. So sometimes policies and procedures are in place, but they are not understood. And then communication of results. So we must be able to communicate results and impact to the stakeholders. So we need to understand the remediation methodology, and that way we'll be able to have a successful combined assurance. So approach to combined assurance model, I think I'll skip this slide. We've talked of, so how do we implement combined assurance? We provide first make sure that you provide awareness on combined training. Secondly, you need to conduct gap analysis. And then after that, you develop a framework and plan. Then you provide supplementary capabilities, such as control self-assessment. And then you have management with tools to drive combined assurance. So this will tell you in terms of the level of maturity. So I think I've already alluded to this. I'll just mention in passing. So you need to just go back to the previous slide. So first, you need to identify the role players. So who are the people we are going to work with? Then number two is what are the areas of potential combined assurance? Of course, there are certain roles which you may not be able to rely on combined assurance. Then the next one. So once you need to also identify the risks and the controls which are in place so that you identify the residual risk exposure, and then you determine the scope or the coverage of the assurance. Is it going to be done on quarterly, monthly, or annually? Then you now implement the combined assurance strategy. So what are the challenges and how do we bridge the gaps? Next. So challenge number one, and I'm not being personal here when I speak. So number one is on internal audit practitioners believe that groups within other lines of defense lack maturity. So, and I see this a lot, even between the external auditors and internal auditor, there's that sibling, whatever, rivalry. And you can consider a number of resolutions there by defining a maturity model that describes the desired behaviors. So if you have a maturity model which says, if you have these attributes or characteristics in terms of your function, then you fall here. So of course, there are those which are starting, there are those which are repetitive, mature, and then they're advanced. And then we also deal with the issue of proactive communication of expectations and the standards for reliance. Next challenge. So challenge number 2, we have various definitions of risk and risk management across the 3 lines. What must come out is the tone at the top may not convey the importance of communication and collaboration across the organization to bring about disciplined approach to manage risk. So those are the options. We have been given some options in terms of what we should consider. Next. Number 3 is there's concern that reliance may impair internal audit's independence and objectivity in fact or in appearance. This reminds me of one of my bosses. One time they said we must appear to be independent, both in fact and appearance. So one of the key to mitigating this idea that internal audit independence and objectivity may be impaired is by placing reliance, is ensuring that sufficient documentation and process protocols not only exist, but they are being followed. There's also establishing lines of demarcation as necessary to protect internal audit from independence risk. The next challenge. Number 4, so there's also lack of prescribed guidance for internal audit practitioners to follow. So you're sort of breaking new ground. So even in our organizations, you need to look for guidance related to the concept of reliance, generally targeted towards external assurance. I think artificial intelligence, AI, the chat GPT will really play a key role here. Next. So the last section, the last part of the presentation is just trying to put into perspective what OIG has done with the public sector entities. So we have at the top there, we have external regulators. So if OIG belongs to a number of supreme audit institutions globally. So within Africa, we have something called Association of English-speaking audit institutions, AfroSai, and so they sort of periodically what they do is they do peer review in terms of the way as a supreme audit institution is carrying out its work. And then we have Senate and we have Parliament. At corporate level, you have a board. Now these are the auditees and senior management oversight. Then you have the audit committee, risk committee, and other committees. Bottom there, you have the business units. And inside there, you have the internal audit. You have the risk management, internal audit, compliance, external regulator, legal, and other external audit. And when I speak of OAG approach, because the audit universe for us is the 12,000 plus entities, public entities. Next slide. So if you look at management side, you have the accounting officers, which comprise of the principal secretaries and the CEOs. You have the accountant general, the heads of accounting units, heads of departments, management committees. And the external auditor for government is Office of the Auditor General, and you have other external consultants. So those are the external assurance providers. Then internally, you have the internal audit general department within government. You have audit and risk functions. You have regulatory and oversight bodies. You have county assembly, senate, the national parliament, and these are on the side of internal assurance providers. Then, so the intersection of all these three should result into combined assurance. So if you look at legislation, Section 33 of the Public Audit Act, it says the final report by internal auditor, which has been deliberated on and adopted by audit committee of a state organ or public entity, may be copied to the Auditor General. May. It's not compulsory, but it's good practice. Subsection 2, it gives unhindered access to the Auditor General to all reports, audit reports of state organs and public entities under subsection 1 above, which is subject to audit by the Auditor General, as provided for under Article 229, subsection 4 of the Constitution. So you see there's opportunity for internal auditors in public sector to work with the external auditor. And I'm sure even private sector, this is an area of interest if we are not doing already. So ensuring compliance with laws, regulations, and policies, one needs to evaluate during evaluation of projects, especially multi-year projects on areas such as payments, finalization, and payables. So that's an opportunity for internal and external auditors in public sector to work together. There's also engagement with other government entities to identify overlaps or joint projects for implementation. We have project areas that lead to delay in payment, resulting to penalties, legal suits, and awards. Also, there's area of advisory or need to engage experts such as the Attorney General or legal experts in contracts. Then we have the issue of monitoring, tracking, and follow-up of implementation of external auditors' recommendation, and much more. Next. Because of pressure of time, I think I want to stop at this point and maybe give opportunity for a few feedback, and feedback does not have to be questions only. Thank you very much.
Yeah, so thank you, FCPA. I would say this was a precise, the content is rich. It's a great presentation. We really appreciate. Allow me to check at the chat if there are any questions. Yeah, so yeah, good feedback. Members are like, good presentation. Share the presentation in our emails. Of course, there were drawings. Someone was like, you delete those drawings in the screen. Sorry for that. Yeah, so are there any questions? Really, apparently there are no questions in the chat. It qualifies the statement that I said the presentation was rich, it was detailed, and we've learned a lot. Excellent presentation. Yes, there's one question that has come in, I think, as we wrap up. From Michael, he says that, yes, how do we undertake combined assurance without compromising our independence as internal auditors? Yes, maybe FCPA, you can take that question. Over to you.
Yeah, thank you very much. I think I connect with the person who asked this question, and he's coming all the way from Ghana. And thank you, Michael, for tuning in. Michael, I worked with him at some point in part of my career. So his question is, how do we undertake combined assurance without compromising our independence as internal auditors? So I would quickly say that if you make reference to your internal audit charters, I think it's very clear in terms of the do's and the don'ts. But more importantly is the standards, the global internal audit standards, which gives us guidance in terms of how do we safeguard our independence. We should not look at independence as mutually exclusive, because at the end of the day, internal audit is supposed to add value. So long as you are not part of the process in terms of the day-to-day operations of an organization, then it's very unlikely that your independence is going to be impaired. And in any case, if you are collaborating with the other external assurance providers, I don't see how your independence and objectivity is likely to be. I don't know whether I've responded sufficiently, but that's what comes to top of my mind.
Yeah, so thank you, FCPA. One more question. So in some instances, the Office of the Auditor General can make errors when they're making analysis of the reports. So the question is, this is from Saben, is like, what is the remedy? Over to you, sir. Thank you.
Yeah, if I pick the issue of financial statements, what does the standard say? As soon as you notice and you take note of an error, you correct it at the earliest point, and you make a disclosure. So in instances of public audit, remember Article 229 subsection 7 says that we must submit a report to Parliament, either Parliament or the relevant county assembly. At the point, and Article 229 subsection 8 requires the recipients, now which is the Parliament and county assembly, to deliberate on those reports within 3 months. So there's opportunity in terms at the point of public hearing to remedy in the event that there's an error. But if you look at the audit process again, audit process as windows of opportunity to interact with the auditee as OAG. First, when audit is ongoing, we share audit queries and give the client opportunity to respond. So sometimes something we think it's a big issue, then when we get additional information, it's clarified and the issue is marked as resolved. But there's also the second opportunity. The audit queries which are not sufficiently addressed is shared with management in the form of management letter. And the management letter gives another opportunity for the client to respond, normally within a stipulated period. So if there's any issue which was not accurate, then when we are reviewing the responses, then we're able to drop those issues. But remember that also as the client, and I'm speaking to Sir Ben here, you need to also point out, remember you're an equal professional like the external auditor. So you should not be explaining from a point of disadvantage, but you should be speaking as a professional. Then finally, there's the issues which are not sufficiently addressed in the management letter. Those are the ones which are escalated to the draft audit report. And the auditee is also given a few days to respond. So all these three windows, I see the opportunity in terms of addressing in case there's any error which was not seen by the auditors. And remember, these documents are issued at different levels. The management letter is issued by the directors of audit. The draft audit report is issued by the Deputy Auditor General. So it will have gone through various levels of review, and issues are even resolved or kept in view for the next period if management has already started to address the areas of concern.
Okay, thank you, FCPA. So the questions came in. Let me pick 2 or 3 questions. One is from Gladys. So she's looking for a trainer. Is this a possibility? I would tell you that yes. Just reach out to Dorte&Associates and you will get the assistance. Good question for FCPA. Who owns the results from a combined assurance process? That is one question. And to add another question from Wita, is like for those of us who are in an external audit, could this combined approach interfere with our findings, given that we use different techniques? And the last question that is so direct to FCPA, that is from Martha. She's like, is there a directive from the Auditor General that the audit committee of the board should meet the Deputy Auditor General in the audit cycle? If so, what could be the agenda of such a meeting? Over to you, FCPA, as we wrap up.
Okay.
Thank you.
Yeah, let me begin with the last one. I don't think there's if you look at the PFM Act, there's some section there which spells in terms of how the internal audit and external audit should work in public sector. I want to say that in most organizations, and let me use the listed companies. If you look at the process in terms of approving financial statements, they actually come through the board. And normally it's through the subcommittee of the board responsible for financial reporting. And you'll see that this responsibility is assigned to the board audit committee to approve the financial statements and recommend to the full board for submission to the Auditor General. So once the audit is done, best practice is to share the findings of the audit with the committee which approved the financial statements. Of course, the issues which you share are the ones which are strategic in nature, but also more importantly is to get feedback. Maybe there are certain areas where the auditors missed. Remember, the areas you apply yourself is based on the risk assessment that you have undertaken. So engaging with the board is the committee of the board. There's no crime about that. It's just as part of the audit process. maybe it's something new in terms of mainstream public service, but private sector, this happens all the time. The auditor, the external auditor engaging with the audit committee. There was a question from, is it Muita? On the issue of, on the issue of, could this combined approach interfere with the findings, our finding, given we use different techniques? I think I spoke to this aspect that we are looking at your expertise and saying, which area do you think can rely on the work of internal audit, for example? And I gave an example like stocks verification. If you look at stocks, if you are witnessing the stock count, I think witnessing is the same. For internal auditor or external auditor, the approach is one. You want to make sure that the counting is done well and the findings are documented. So it's based on those mapping out and identifying the areas of common interest. Then on the basis of that, you say, if this expert has looked at it, I don't need to relook at that. Then there's a question from Komen. He asked who owns the results of a combined assurance process. I think all the stakeholders, all the experts to the process, because first we sit down and agree where which are the areas that we are going to undertake combined assurance. And on the basis of that, the outcome should be owned by all of us.
Okay, thank you. Thank you, FCPA. I can see we don't have time, but as we come to the very end of this webinar, allow me to, before I welcome our managing partner, allow me to recognize the presence of one. I've seen members who logged in. Let me recognize the presence of FCPA Langat. FCPA, you can just say aye to the team.
Thank you. Thank you very much, Elias, for this opportunity. Thank you very much, FCPA Kamar, for that presentation. That was awesome. And to members, learning has taken place. There is value adding. This was a value adding engagement. I think to that extent, that is what I can say in the interest of time.
Thank you, FCPA. Yeah, thank you. Thank you, FCPA. Allow me then to recognize the presence of my good friend, saying this without fear of contradiction, Parfin Sikei, who is a board member and the chair of Audit Committee of the National Council for Population and Development, that's a state corporation, is in attendance in this webinar. Parfin Sikei, sir, maybe you can take this 1 minute to say aye to the participants in this webinar.
Yeah, thank you, Eliasa. Apparently mine doesn't start with an F. I'm my director, Pravin. And it was quite interesting, and I've learned lots. I remember my last meeting with my team. FCPA Kamara has actually aligned some few things which you are trying to come in terms with, and I think I'll engage you guys privately for some meeting of the same with the team. So thank you so much, and entire team, thank you for the interest of time.
Thank you. Yeah, thank you, Parfin. As I say, that is my mentor. We will talk about that in some other time. Allow me then to welcome our managing partner for the closing remarks. As CPA Dot, welcome.
Someone is excited like me. Thank you very much. FCPA Kamar, nimesimama nikisema asante. for giving us a very powerful session on combined assurance. I'm sure, based on the comments that are coming in, it's a heavy topic, it's a heavy activity, but if it is done correctly, it can really augment the activities of the various assurance parties. Thank you very much, CP Eliasa, for recognizing our leaders in the house and people who are already impacting the profession well out there. Someone needs to mute. So without taking a lot of time, because I see we're already past the hour and we like to keep time, I just want to say thank you very much, FCP Kamar. Thank you for taking us through the session. This is our last session for this year, and it has been well in and very, very, very good. So this is like from us, we wish you a Merry Christmas. It's a bit early, but for those of us who will be around on the 20th of this month, we will be having our last sort of coffee date event, because Nairobi had requested for a last event. So we will be sharing out the details. If you will be in Nairobi on the 20th, you can join us for end of year meet and greet. It will be in Nairobi. We will share the details as we in the usual channels. Then for the Kericho coffee date, it's tomorrow from 6 p.m. in Kericho Sahara Gardens. If you're in Kericho, please come and join us as you network and learn from each other. And always, here we meet a lot of young professionals, and it is always encouraging to talk to them and encourage them on how to, take the ropes from the profession. For the inquiries about training, about activities that you can do together, please reach out to us. Our contacts have been shared, and you'll also find our contacts from our website, dorte&associates.co.ke. As I said from the beginning, we offer GRC consultancy services, and on top of that, we offer these free sessions just to share knowledge from among ourselves and to get knowledge from experts like FCP Kamar, who are willing to actually volunteer their time and teach us and from their wealth of experience. This information will otherwise come to you very expensively, but we bring it to you free of charge every last Thursday of the month. So until next year, I wish you a good evening. And as we part, I just want to give FCP Kamar one moment to give us his parting shot. And then from there, we will all have a good night. Merry Christmas. See you on 20th or tomorrow in Kericho. Other than that, we meet next year for our first session on Dorte&Associates knowledge sharing webinars. Okay.
Yeah, I think I want to appreciate the participants for staying in during the session. I think I saw the numbers went high as 70 something. I think that's a good attendance, and I want to say that no one has monopoly of knowledge, and I believe that in the subsequent sessions also we'll find time to check in and also listen through, so that as they say, iron sharpens iron, so as to human. So next time you have sessions, please invite us and we'll be able to participate. I'll be available in case anybody wants to ask clarification or more individualized whatever questions relating to our organization. I'm on reach, and I'm sure CPA Dorothy will be able to link you up with me. Thank you very much.
Thank you. Thank you, FCP Kamar. From Dorte&Associates, do you have a Merry Christmas? Enjoy your evening. Good night, and see you tomorrow in Kericho and on 20th in Nairobi for our end year event for Dorte&Associates. Goodbye and good night.
Thank you. Bye.
Bye.
Thank you. Bye-bye.
Thank you. Goodbye.
Thank you. Bye. Vivi.
Kidogo tu
niguzilie maneno moja mbili, na wacha kwanza niseme